One investment, one strategy, one steady income. Imagine making money while you sleep. No need to be glued to stock charts. No daily stress over market fluctuations. In this video, we will show you the hidden power of index funds and how you can start earning money passively without the complexity of picking individual stocks. So let's start the video. But before that, make sure to press the like button and subscribe to our channel for more strategies to help you make money effortlessly. What are index funds? Could one simple investment option give you all the benefits you've been looking for? Diversification, low costs, and ease of use. At the heart of index funds is an extremely straightforward concept. An index fund is a type of investment fund that seeks to replicate the performance of a specific index in the stock market, like the S&P 500 or the NASDAQ 100. Instead of picking individual stocks, index funds invest in a broad range of companies included in the chosen index, providing you with instant diversification. Think of it this way. By investing in an index fund, you're not relying on a single stock or company's performance. Instead, you're investing in the performance of the entire market or a segment of it. This makes index funds a safer long-term investment strategy compared to actively choosing stocks. How do index funds make money for you? Ever wondered how investing in index funds can grow your wealth without you lifting a finger? Index funds generate income in two main ways: capital appreciation and dividends. Capital appreciation. This is when the value of the companies in the index grows over time. As their stock prices rise, so does the value of your investment. Dividends. Many companies within an index pay dividends to shareholders. These dividends are collected by the index fund and passed on to you, whether as a cash payout or reinvested to purchase more shares. The beauty of index funds is that you don't need to do anything for your money to grow. The companies in the index are constantly evolving, increasing their value and generating profits. Your investment grows quietly in the background, working for you as you focus on other things. The beauty of passive income. What if you could earn money without needing to be actively involved? This is where passive income comes into play. Index funds are the ideal way to generate passive income. Once you invest in them, you don't have to do much. Just let your money grow over time. Whether it's through reinvested dividends or the general growth of the market, your index fund investment can continuously generate income. The best part? Index funds require very little maintenance. After setting up your investment, you simply sit back and watch your wealth grow. There's no need for frequent buying or selling, and you don't need to constantly keep an eye on the market. It's all about patience and letting time do the work. Why index funds are ideal for beginners? Could you start your investment journey with minimal knowledge and still build a solid portfolio? Yes, index funds are perfect for beginners who want to start investing, but don't have the time or expertise to research and manage individual stocks. Because they track a broad market index, they provide instant diversification. This reduces the risks that come with individual stocks, which can be volatile and unpredictable. In addition, index funds are low-cost investments, since they're passively managed, meaning the fund manager isn't making active decisions on which stocks to buy or sell. The fees associated with them are much lower compared to actively managed funds. This means more of your money stays invested, earning returns. Compounding. The secret ingredient to wealth. What if the secret to growing your wealth lies in allowing your money to multiply over time? When you invest in index funds and reinvest the dividends you receive, you're tapping into the power of compounding. This refers to the process where your investment earnings, dividends, and capital appreciation are reinvested, generating more earnings over time. Here's how it works. Instead of cashing out the dividends, they get reinvested into more shares of the index fund. As time goes by, the value of your investment increases, and you earn more dividends, which get reinvested again. Over the years, this compounding effect can have a significant impact on your wealth. It's like planting a seed and watching it grow into a tree. Every year it gets bigger and more fruitful. The long-term investment strategy. Could long-term investing be the key to financial success? When it comes to index funds, patience is key. They are not designed for quick profits. Instead, index funds are built for long-term investors who are looking to grow their wealth steadily over time. If you start early and invest regularly, your money will grow significantly due to the magic of compounding. A common mistake many beginners make is trying to time the market, buying and selling at just the right moments to make a profit. However, this is extremely difficult to do consistently. With index funds, you don't need to worry about market fluctuations. By staying invested for the long term, you let the market's overall growth benefit you. Historical data shows that markets, while volatile in the short term, tend to rise over the long run. Diversification, the safety net you need. What if there was a way to reduce risk while still making your money grow? Diversification is one of the main reasons index funds are so powerful. When you invest in an index fund, you're not putting all your money into a single stock or company. Instead, you're spreading your investment across multiple companies in a particular index, such as the S&P 500. This means that if one company in the index underperforms, it won't have a major impact on your overall investment. By diversifying your portfolio, you reduce risk and increase the likelihood that your investment will grow steadily over time. Low fees, more profits. What if you could save more money by paying fewer fees on your investments? The lower the fees, the more money you can keep invested in your index fund. One of the main advantages of index funds is their low expense ratios, the fees you pay for the management of the fund. Since index funds are passively managed, tracking an index rather than picking individual stocks, they don't require active management and therefore incur much lower fees compared to actively managed funds. Over time, these savings add up. Imagine if you paid 1% in fees versus 0.1%. You could end up with tens of thousands of extra dollars in your account due to the money that's saved from fees alone. Building a long-term wealth plan. Could index funds be the foundation of your long-term financial plan? If you're looking for a reliable, low-maintenance way to grow your wealth, index funds should be the cornerstone of your investment strategy. Whether you're saving for retirement, a down payment on a home, or other future goals, index funds offer an excellent, hands-off approach to building your wealth over time. By consistently contributing to your index fund investments and letting them grow, you're setting yourself up for long-term financial success. It's a slow and steady approach that pays off in the end. How to get started with index funds. Ready to start making money while you sleep? Getting started with index funds is simple and requires very little knowledge. Here's how you could begin. Number 1. Choose an index fund. Research the various index funds available. Look for funds that track well-established indices like the S&P 500 or the NASDAQ 100. Number 2. Open a brokerage account. You'll need an account with a brokerage that offers access to index funds. Many online platforms make it easy to get started with low or no account minimums. Number 3. Set up automatic contributions. To take full advantage of dollar-cost averaging, set up automatic contributions to your index fund. This will ensure you invest consistently, regardless of market conditions. Number 4. Stay the course. Be patient. Index funds are best suited for long-term investors, so don't worry about short-term fluctuations. Stick with your investment strategy and watch your wealth grow. So, what do you think? Could you imagine letting your money grow while you sleep, effortlessly adding to your wealth every day? Index funds provide an accessible, powerful way to do just that. By making smart long-term investments, you're setting yourself up for financial success without the need for constant monitoring or active involvement. What part of this strategy excites you the most? Drop your thoughts below, and don't forget to like and share, and also subscribe to watch more informational videos.